What's up, edge traders? This is Adam Winnig here with another video where we're going to be talking about top-down analysis. And in this video, in the next 10 minutes, you're going to master top-down analysis. You're not going to need to look at any other YouTube videos. You're going to simply master it in this short video. Now, why is this important? This is extremely important because if you're using trading signals or you're making decisions based off of solely one time frame, then you might as well just flush your money down the toilet. Oh yeah, and by the way, to make your trading elf easy, lucrative, and fun, go ahead and click the subscribe button and turn on post notifications so you don't miss any other helpful videos. We made a ton of helpful videos like this. Some people are saying that we're even the best Forex channel on YouTube. So thanks to all you guys that are commenting in the comments below. With that being said, let's go ahead and do this. Let's talk about top-down analysis. And in the next 10 minutes, you're going to master and understand how to use this tool in your tool chest for your trading. Now, this doesn't matter if you're trading just Forex or if you're trading cryptos or you're trading stocks. It doesn't matter. This is going to be applicable no matter what market you're trading. So let's go ahead and let's take a look at this. This is a daily chart. Obviously, each candle represents one day. Okay, we're going to take a look at this candle that's just right here. Okay, now looking at that candle, obviously the candle is comprised of a few different things: the low, the close, the open, and the high, right? So it opened here, the highest it went was here, the lowest it went was here, and it closed at this point right here. Okay, now if we break down the daily candlestick right here into the H4 time frame, for example, we see that there's 6 candles that make up the daily time frame because there's 24 hours in a day. 24 hours divided by 4 hours is 6. So there's 6 candles, which you can see the 6 candles right here, which if you take a look at the daily and you compare it to what happened on the H4, you could just get a more granular look at what's actually happened. And don't worry, I'm going to tie this all together and show you how to make this work for yourself. If you take a look at this, you can see that the open was exactly at where the open of these 6 candles was. The high was the very highest that it went during these 6 candles or during this one candle. The close was the close of the very last candle, which was right here. And then the low was the very low of the 6 candles right here. Okay, so you can see it just broken down a little bit further. Now, if you take a look at it, okay, so here's the daily, right? We had this candle, then we had the 4 hour, which is the 6 candles that make that up. And then if you look at it and you break it down even further to the hourly, now you have 24 candles that make up this daily section, or you have 4 candles that make up this 4 hour section. So you're zooming out, and I'm going to show you how to put this all together in just a second, but we're zooming out. So there's 24 candles that make up this one candle. So again, we can see it. Okay, the very first candle, this was the open, right? Okay, the high was the highest point that it went. Okay, the close was the last closing candle. The low was the very low during these 24 candles. So you just see a more zoomed out version. I'm going to show you why this is really helpful in just a second and give you a couple examples so you can put it all together. So again, this is what it looks like. The open was here, the highest it went was up here, the close of this session was here, and then the low was here, right? Which is the same thing on the 4 hour, same thing on the daily. So they're all saying the same thing, but when you get into these smaller time frames, it's like zooming in with a magnifying glass and you can see things a little bit more detailed, kind of like if you have one of those face mirrors that like really blow up your face. Like you can see your face, but then when you put this face mirror on you, then you can really see all the little indents, all the pimples, everything on your face, right? That's kind of what we're doing here when we're breaking it down to these lower time frames. And then you could even get crazy and you could break it down, right, even further to the H1 to the M30. Okay, same thing happening, and then all the way down to the M15 if you really want to, right? You're just getting a more granulated look at what's actually happening. Okay, and you can think of it another way to think about this is think about like pixels on a computer, right? Pixels on your computer, they're just made up these tiny little squares, right? And if you have bad quality, right, you just see these big squares, right? But if you have really high resolution, you see tiny little things and you're able to see better detail, right? Maybe that's not the best analogy, but you get the point. So let me explain how to put this all into action and why this is really important. Okay, so I actually made this video because I was looking at this chart yesterday. If you're planning on trading like the H1 time frame, for example, as a rule of thumb, you want to take a look at like the 2 higher time frames, right? So if you're trading the H1 time frame, you'd want to take a look at the H4 and the daily. Why is this? Because you want to zoom out and you want to get a better picture on these higher time frames of what's actually happening with the market structure. And when I'm talking about market structure on the H4 and on the daily, we want to get a better idea of what's happening with the market phase. Is it in a trending phase? Is it in a ranging phase? Or is it just in a choppy phase? Okay, so that's why we're zooming out on these higher time frames. One, to get an idea of the market phase. So is it trending, ranging, or choppy? And then the next thing, okay, and if you're not familiar, okay, a ranging market is a sideways market. A trending market is, trending to one direction. And choppy is just a lot of price action that's not really moving. Like this section right here would be considered like a choppy action right here. What is the market phase? The second thing is you want to get an idea of what are the key zones on these higher time frames, okay? And as you can see here, I was looking at this chart last night and I saw that this was totally a key zone. zone? Well, first off, I looked at the market phase. This is very easy to tell. It's a trending market, and I could see by higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And you could see that this is definitely in a trending market phase. So I knew that, okay, boom, it's a trending market. I'm probably only going to look for buys. And then I looked for this zone here, and I saw that this was a previous resistance zone that is now coming down because the market pulls back, right? It goes expansion, then it pulls back, expansion, then it pulls back, right? In a trending phase. So I said, this is probably a key area of value. So I drew this square on here, right here, okay? Now, let me show you why this is key, because if we didn't look at the daily time frame, it could have been a mess. We could have totally, went the opposite direction. Look, just for example here really quickly, if we drop down to the H4 time frame, for example, okay, and we take a look at what's happening, we can see that, yeah, it's on an uptrend, right? We can see that. But look, if you were to only look at the 1 hour time frame and you looked at this, I would look at this and I'd say, this kind of looks like it's actually in a downtrend. Like if you just looked on this time frame, look, you see it's making lower lows and lower high, lower low, it's kind of moving on downwards, right? As you can see here. And I would say, hey, this is a pullback. It's pulling back to this 21 EMA right here, and it may come down, because I would have never saw this key area, this key zone right here, which is a key support zone on the daily time frame. And I would have probably thought, okay, here's a great time to sell, right? Which is what most people do. So that's why we have to look at the higher time frames and do this top-down analysis. Now, here's what's interesting. So I pulled this up and I was looking at this chart and I was thinking, okay, if I looked on the hourly time frame, I was going to sell, but I would not be looking to sell in this market phase where it's clearly in a trending fashion. Now, look what happened overnight. When I woke up and made this video this morning, look what happened. The very next candle that was printed, boom, this huge bullish candle, right? You can see that right here, made this huge gigantic bullish candle, and price looks like it's respecting that key area of value and it's moving on upwards. So again, if you look at that on the 4 hour, what that actually looks like is like, boom, it respected it beautifully and price is coming on off beautifully, right? And if you look on the 1 hour, you can just see kind of a more granulated look at what's actually happening there. You can see that, wow, okay, it's beautifully came off of this zone and price is clearly on upwards, okay? So that's the key reasons why we want to do top-down analysis. It's going to help you get a better sense of what's actually happening in the market. Now, if you're not familiar with the concept called candlestick price action, or if you're not familiar with this concept called wick fills, I just filmed a video about it and I want you to watch it right now. It's going to help take your trading game to the next level. So go ahead, subscribe to the channel, turn on post notifications, leave us a comment if you thought this was helpful, and check out this video right now.